Deven Choksey joins us now, Managing Director with Choksey Securities. Deven, always delight to have you back on ET now. Thank you for joining us. Deven, this week we are pitted against several global and local events. We have Fed, a meeting of European finance ministers, WPI followed by IIP. So do you think the next 100 points on the Nifty will be decided on the outcome of these events? And currently, we like it, we don't like it. Even though there is abundant liquidity, Indian markets are still hostage to global cues?
Yeah, Nikunj, good morning. Well, for sure, I think the Indian market, would be driven by the liquidity. If you look at, the FI flows which have been there in this month as well, even including yesterday, the provisional data suggests that they've been regularly buying in this market. So one thing is very obvious, that the ETFs which are pumping in money at this point of time in emerging markets like India, they are largely looking at the growth for their side, and I think they are probably finding the equation of growth in India. Because the markets are deeply oversold, the valuations are not as bad, as one is fearing about. In selective pockets, you definitely find, good valuations. So they are pumping in money into this kind of an environment. The global headwinds are going to stay here for some time. I don't think that they are going to disappear in a smooth succession. Of course, the European Commercial Bank, the German constituents, they are basically taking their course of actions for corrective decisions that they have taken already. So to my mind, these are some of the events which are not going to disrupt the momentum of the market beyond a point. But yes, of course, for it to go up above 54.10, 54.50, you require a very solid boost. And to my mind, this boost will have to come from the domestic market. Probably the global markets are doing their best as far as ensuring the stability in the global environment. India needs to do, much more than what it is doing right now. Already, we are expecting the decision on GAR to come up maybe by the end of this week, maybe next week. If they resort to coal deallocation, it would be suicidal. That would probably once again give a knee-jerk reaction to the market. End of the month, you are expecting retro tax reversal kind of a move coming up from the government. And likewise many other issues which government needs to take care of, including bringing down the tax rates probably to allow the higher amount of growth happening in the system. So all of these measures are likely to probably decide the momentum of the market. But as of now, I believe that we are capped at 54.10 and downside is capped probably at 5300 levels.
What is the correct way to look at this market? Because Indian markets for sure are getting extremely bipolar. One side you got FMCG, which is at a multi-year high. Large FMCG names are trading at P multiples of 20 plus. Other side you've got infra and some banking names which are trading at a multi-year low.
Yes, Nikunj, if I extrapolate, further and put across some of the names straight away, the reality will come in front of us. You exclude HLL, HUL, ITC, you exclude some of the IT companies and pharma companies and actually look at the index. Probably you would find that the index is much more lower than what it is quoting currently. What I'm trying to say is that some of the heavyweights have been dominating into the markets. And why this character is? The important part of this character is that the traders who have entered into the market, the ETFs who basically take the positional call into the market, they would like to rotate their portfolios from time to time. And currently they find safe haven in FMCG and the pharma stocks, which they retain by and large. And probably try and put across their excess liquidity into those stocks. So these stocks are definitely holding the fort for them as far as their India portfolio is concerned. But on the other side, very rightly said, the stocks which are in the metal space, stocks which are in the infrastructure space, they are becoming victim, or even for that matter banking space, they are getting victimized right now, more importantly because of the inactions happening in the economy. I'm not totally ruling out this kind of a behavior of the traders, because they must take this kind of a call, otherwise they cannot make money out of this market. But what about investors? Investors are getting some of these stocks at a valuation they are far more cheap and lucrative. Whether they will come forward and buy, whether some serious investment money will come and buy these stocks, whether LIC kind of company or the insurance companies will come up and buy this kind of stocks, that remains to be answered. But yes, it's extremely polarized in tilted towards the FMCG and the pharma in particular.
Deven, what did you make of the latest news that has come out? The Goa government suspending all mining activities temporarily and how it's likely to impact Sesa Goa. You just talked about metals. Do you think because of the kind of news flow that we're seeing on the space right now, it's best that one avoids?
Certainly, I think, if I have to put it this way, even the governments of the country, they are learning. They are learning at the cost of the nation, probably. I think they don't realize that every time having a knee-jerk reaction and stopping the activities in between, I think that affects the entire rhythm. It affects everybody. It affects the entrepreneur. It affects people within the system. It affects the banking into the system. Everybody gets affected. But unfortunately, that accountability is not assumed by the governments of this country. It is unfortunate part. I think we have seen something happening before in last year in Karnataka, and we have seen how Supreme Court thereafter, I think, gave the judgment. In 1 year time, nothing has changed, frankly, and I think they have not been found guilty either. So where exactly we are blaming people, where exactly we are blaming entrepreneurs? According to me, I think the maturity has to come in this direction. Unfortunately, investors, I think, would suffer because of their investment into some of the mining companies. And I'm sure, I think, they will have to have little larger holding period for their investment. It is unfortunate, but there is no escape to this.
What are the data points or key parameters you are mapping which would suggest that it's time to sell consumption stocks and time to buy investment stocks? Because this kind of a phenomenon cannot last for eternity. Ultimately, the cycle will turn one day.
Yes, I think you are right, Nikunj, that this kind of valuations certainly, I think, cannot last forever. Now, for these valuations to come down, I don't think that fundamentally these companies will have to do something wrong. According to me, I think they probably may not do anything wrong as far as their fundamentals are concerned. But how would the valuation come down? The valuation probably may come down when you shift over from, I think, the expensive stocks into the bargain stocks. So obviously, I think some of these companies which are quoting at expensive valuation, they need to come down, and they will come down only when investors or the traders start buying some of the bargain stocks, when a portfolio shift start taking place. So close eye will have to be on whether the long only funds are coming in, they are buying in some of the good quality infrastructure stocks into the market, they are buying in some of the good quality banking stocks into the market. If that does start happening, then in such situation, I think probably you may see some amount of sell-off coming into the consumption stories. But till that point of time, you see the clarity emerging into the markets on that front. Probably you may not see big selling coming in. You may see some amount of part profit booking coming in, but big selling may be out of way at this point of time. So we'll have to really look at the growth emerging into the banking infra kind of a space.
Deven, what I'm trying to understand from you is that what could be the trigger for some of these infra and some of these banks? Will it be RBI action? Will it be revival of investment cycle, or it has to be something from central?
No, I think sentiment is for sure. I'm sorry, I think I elaborated, but the point which I wanted to make was the infrastructure, the trigger point here would be whether the government is showing the will to address the situation on the environmental front. I think the environmental issues are basically crippling most of the infrastructure companies. They are not allowing them to execute projects. If government starts giving some kind of a policy direction on that front, then probably I think some of the infrastructure companies which have already got projects in hand, I think you would start executing, and that could possibly mean the reversal of cycle taking place. So certainly I think the ball lies in the court of government to, I think, address some of the policy issues on the environmental front ASAP basis.
What is driving Bajaj Auto? Because Hero MotoCorp is struggling and Bajaj Auto is gaining market share.
I think two fundamental factors, Nikunj. I was listening to what you have been analyzing. I think two fundamental factors, I think, which could possibly go in favor of Bajaj Auto. They are creating a new category of motorcycles which are about 200cc motorcycles. According to me, I think this is going to be the driving force for Bajaj Auto. They created the same category above 100cc and up to 200cc, I think, few years back, and we have seen that around 38 to 40% of the market share that they command because of that only in that category. Now they are creating another category which is once again giving them the kind of a head start as far as, I think, the domestic market is concerned. Due to the slump in the market, I think still because of the new category of vehicles coming in, they are seeing the offtake coming in from the domestic market. So that is the one big plus point. To my mind, I think it will have very positive implications coming up in subsequent years of time as well. And particularly when the situation starts getting normalized, rate of interest coming down and the demand picking up in the rural market, you will see, I think, more amount of traction on the growth side. Second important aspect is about the exports. Basically, I think having got the head start in the exports market, probably they are way ahead of other Indian peers probably, and I think they are likely to get more amount of advantage due to that. Of course, the Sri Lanka, which was struggling, has already started, and probably I think the numbers are showing some signs of picking up in this month. So again, I think we will see some better numbers going forward. So these two fundamental factors are suggesting that the volume may not be so bad, even though the industry average growth may be just 4%, 5%. I think they may probably remain on at least double the size of the industry as far as the growth is concerned in this year as well. That's where I find that the Bajaj Auto is different compared to the many other stocks in the market.
Anything which is looking hot or attractive in the agri space, where if you're bullish on agri, commodities, or if you're bullish on agri as a theme, what could be a good proxy buy?
Well, I think the best proxy at the current market valuation could be Jain Irrigation. I think the stock is very interestingly placed. I think at a valuation of, at this price of around 60, the stock is in the single digit PE. The growth in this company is, I think, coming up in normal situation, I think it would be at least 20% plus. But in a current situation where the monsoon in the first half has not remained on the expected lines, it may be slightly lower. But still, I think Jain Irrigation looks interesting for current levels.
Deven, if I could challenge your thought with the fact that Jain Irrigation is no longer a pure irrigation company. I mean, they plan to float NBFC. They are not generating a lot of free cash flow, and markets in the near term don't like companies which are not generating free cash flow. In fact, the return on equity for Jain Irrigation, because of the NBFC business, will only contract.
Now, Nikunj, I think on the NBFC side, I think there are two things which I would like to clarify. I think the NBFC is basically, I think, promoted by the promoters of Jain Irrigation and not Jain Irrigation directly. So they would be holding, as I understand, around 40%, and balance 60% would be held by NABARD and HSBC. So from that point of view, I think the NBFC is just going to be a kickstart from the promoter's side. But more importantly for Jain Irrigation, NBFC would be, I think, a strategic move, because after 90 days, whatever sales, I think, which is there in their book would be discounted or would be passed on to the NBFC, and the money would be collected. So this entire issue of collecting the subsidy from the government and, I think, receivables would go away, and probably, I think, NBFC would take that particular course. So that is something which is going to repair the balance sheet significantly in a first full year of 13-14, and that is where my larger confidence is coming, that if this strategic move has already been taken by Jain Irrigation, and if the business is growing at 20% plus kind of a growth rate, the company cannot be looking so bad. Maybe, I think, in the immediate terms, I think because of the monsoon factor which I explained, to a certain extent you are seeing the stress. And let us not forget one more important aspect. They have a good size food processing unit with them, and that unit is silently growing, I think, very fast, and there is margin in that particular area as well. So to my mind, I think this company is, I think, very strategically poised in agri sector, and probably with these corrective steps that they have taken on the NBFC side, probably I think this company should be seeing much more beautiful in 13-14 period. Maybe in 12-13 you are seeing the headwind still continuing because of the interest burden that they have to absorb in the current situation. But otherwise, I think things are looking pretty well on the structuring side and the growth side for the company.